AGTHX, American Funds, the Growth Fund of America. Class A. This is a mutual fund that invests in a concentrated portfolio of growth stocks. It was actually started way back in 1951, so it's almost 72 years old. It has $180 billion in assets under management and is managed by a team of 16 professionals, led by the legendary Chuck DeLarb. So far this year, the fund is down about 6%. That's actually better than the S&P 500. And over the past decade, it's returned 14.8% annually. But keep in mind, those are with the sales load. Without the sales load, it's 13.8%. So that's a pretty significant difference. The fund has a Morningstar rating of 4 out of 5 stars. And while it's not in the top half of its category, it's still pretty good. Fees and expenses are average at best. It's got a front-end load of 5.25%, an expense ratio of 0.23%. The turnover ratio is 42%, and there's no redemption or maintenance fees. The top 10 holdings include Apple, Microsoft, Amazon, Google, Facebook, and so on. And the portfolio is allocated 90% in the US and 10% in foreign developed markets. The 30-day SEC yield is 1.24%, and the distribution yield is 1.57%. They pay dividends monthly. Over the past decade, the standard deviation is 19.6. Beta is 1.09. The Sharpe ratio is 1.22. The max drawdown is negative 35%. The tax cost ratio is 3.42%, which is pretty high. The turnover impact is negative 1.72%. And the capital gains distribution is 19.88%. Pros: it's a no-load fund with a long history and good performance. Cons: high taxes and fees. I'd say this fund is good for someone who wants a one-stop large growth solution. But that's it. It's really expensive. There's no excuse to pay 5% in sales loads. These days, when you can get very similar performance from a low-cost index fund like VUG or VTI,